Euro dollar daily forecast January 4th, FXEmpire.com. The euro dollar rose on light volume during the Tuesday session. Traders came back to the floors around the world, and as usually the case, optimism reigned at the start of the new year. However, traders should try to figure out what has changed so much since Friday, and the answer is nothing. The optimism is probably best left to the amateurs going forward, as there is also the non-farm payroll numbers coming out on Friday this week. With that in mind, it isn't a real stretch to think that some of the larger firms are probably quite flat at the moment and waiting until early next week to start throwing serious money around. The direction for this pair has been decidedly down recently, as you can see from the purple 20-day moving average and the blue 50-day moving average, as the market has hugged the 20. That is exactly where we stopped for the Tuesday session. There's also a cluster right around 130.50, which could provide selling opportunities. The Europeans have done little to fix the situation in the debt crisis, so to expect this to rally for any significant time is probably a stretch of the imagination. The banks are getting almost free money at this point from the financial authorities in Europe, and taking that money, and instead of buying debt from sovereign debt from countries that need it so desperately, they are parking that money in the ECB. While the rise is impressive for the day, uh, you can see that we did stop right at the first major cluster. Having said this, we are looking for weakness to sell. We don't know if it'll be at 130.50 or if it'll be a little closer to maybe 132, which is the next significant resistance area. Either way, we are not looking to buy the euro, as the dollar is too well loved currently and the euro is just simply toxic.